Lockheed Martin Corporation, a global security and aerospace company, reported their second quarter 2023 earnings July 18. Revenue was up 8% to $16.7 billion for the quarter, yielding a gross profit margin of 12.5%. A closer look at the revenue by segment saw the aeronautics business grow 17% to $6.875 billion as demand for F-35 fighter jets continued. Missiles and Fire Control revenue was flat, but their order backlog increased by 18% to $34 billion. Rotary and Mission Systems contracted by 3% to $3.9 billion as helicopter demand slowed. Finally, their space business grew 12% to $3.2 billion. Lockheed announced in May that this business segment will be reorganized. Turning back to the income statement, gross profit margin was 12.5%, up 7% from last year. EBIT grew as well, by more than 8% to $2.1 billion. Income before tax, however, reveals that last year the company had a non-operating settlement charge of $1.4 billion from an actuarial loss in their pensions. If we exclude this settlement charge from 2022, income before tax would have grown around 20%. Net income came in at $1.7 billion or 10% of revenue. If we back out the settlement charge and use a 16% effective tax rate, net income grew around 15%. Still a solid number. Looking to market value ratios, earnings per share came in at $6.63. Over the past year, the company has bought back about 13 million shares, or nearly 5% of shares outstanding. This has favorably impacted all per share ratios. Sales per share at 66 times, up 14%. Cash per share came in at 14.5 times, up 51%. The increase was due to a retirement of debt in June 2022, which impacted financing activities by negative $2.3 billion. This quarter's financing activities were down just under $1 billion. The company is valued at 36 times book value, up 5% year over year. The company is trading at an annualized PE of 17x with PEG at 0.40. Leverage ratios show debt to assets at 0.45, virtually unchanged. Debt to equity increased to 5.17. The company issued long-term debt of nearly $2 billion. Interest coverage was impacted by that new long-term debt coming in at 9.6 times, worse by 30%. The dividend was $6.08, yielding 1.34%. Dividend growth is 7.32%. The enterprise value of Lockheed Martin is around $129 billion. Some short-term liquidity ratios. The current ratio at 1.36 was virtually unchanged. The quick ratio improved by 26% to 0.40 as receivables and cash increased during the quarter. There is 21 cents for every dollar of current liabilities, much improved from June 2022. Return on assets came in at 11.80% and return on equity shows 18%. The year-over-year changes are again impacted by the pension charge, negatively impacting Q2 2022. The equity multiplier stands at 6.17.